Welcome to Lifeness with Logan Hall. It's life, it's business, it's Lifeness. Live from the StriveVenta.com studios, here's Logan Hall.
All right. I just love that dang song. I'll tell you, my little baby loves that song, too. We're driving down the road the other day, and it came on, and she's in the back seat, and she just started jamming out. I love it. Hey, hello, and good day. Thank you for listening to Lifeness. It's life, it's business, it is Lifeness. I am your host, Logan Hall. Again, thank you for tuning in. Share us with all your friends out there on your social media. Again, we're on iTunes. Here very short in the near future, we are looking to have our own app, which is so exciting. It's going to make the show so much easier for everyone to listen to. It will be the Lifeness with Logan Hall app coming soon. We'll keep you posted on that. We're going to get into it today. I've got one of my best friends. I've known this guy for a long, long time. He's kind of been a mentor of mine through life, through business, through Lifeness. He's kind of been there every step of the way. A good friend of mine, Mr. Kelly McCurdy. What's going on, Kelly Mac?
Hey, Logan. Very excited to be here. It's a great day in Arizona.
Absolutely. It's a little warm out there, but that's okay. We're going to battle through. We know this time of the year is tough, but we've got air conditioning everywhere we go, so just got to stay inside somewhere. Drink lots of water, stay hydrated, make sure you put that sunscreen on because it's a warm one. And I want to just kind of congratulate Kelly. I was telling you before the show, I became an uncle yesterday for the first time. It's pretty amazing. I want to congratulate my wife Haley's sister Dana and husband Bob. Congratulations on having twin sons yesterday.
Wow, that's
Twins.
Great.
Yeah, really awesome. Mama's doing well. Babies are all doing well. 6 pounds, 4 ounces on one of them. 6 pounds, 2 ounces on the other one. That's a lot of baby inside of a belly. And they've got really cool names. One of the boys' names is Asher, and the other boy's name is Emerson. So congratulations to Bob and Dana on becoming mom and dad, and my wife and I becoming aunt and uncle. It's pretty cool. So want to share that. Congratulations. It's kind of keep rocking and rolling, you know. It's life, it's business, it's Lifeness. You guys all know my full-time job. I'm a realtor and vice president of career development for Century 21 Northwest. Real estate is my full-time job. Help people buy, sell, rent anywhere in Maricopa County. I was actually up in Black Canyon City yesterday, way up north of Phoenix, checking out a house up there on a dirt road with my truck getting scratched, getting in there. But it was kind of fun doing some four-wheeling for work. And so what we got today, we got Kelly McCurdy. And Kelly McCurdy is a mortgage professional. I'm going to call him a mortgage expert, a mortgage coach. Kelly and I, we've known each other. I began my career out of college writing mortgages for the same company Kelly and I did, a local mortgage bank here. And Kelly's been doing it a real long time. We're going to say 18 years, I think, is the time frame we counted today. So we're not trying to date Kelly, but he's been doing it a long time. So he's seen all the ups and downs. He's been through a couple bubbles. He's seen the credit burst. He's seen the subprime loans. He's seen it all. So very experienced from the mortgage side. And I wanted to have him on here because the main purpose of today's show is to inform you listeners out there about some of the loan programs that you might qualify for. And what I mean by that, and myself including when I say this, is that we're at a time frame right now where there's a lot of people who had to short sale, foreclose, or even claim a bankruptcy in 2008, 2009, 2010, 2011, 2012. There was a rough stretch in the economy and the housing market for a while, and a lot of people couldn't afford their mortgage payments. Right, Kelly?
That's correct.
You know, we had there a portion, more than half the listings on the MLS were short sales or foreclosures. Very thankful to say now it's less than about 10%. So it's all kind of rebounding. But what I mean is where we're at in this time frame is right now is a time where a lot of people are in that 3 to 4 years out from a short sale or foreclosure and are still renting a home and don't know the exact dates on when they can go out and get a new mortgage. So we're going to talk about that in the second segment of the show, that, you know, you only need to be 2 years out on a VA loan from a short sale. If you had a short sale 2 years ago, you can go out and get a VA loan today. There's a couple other really cool things people might not know we're going to share about in the second segment of the show, but we're going to start it off with basically Mortgage 101. And we're going to assume that I and all of our listeners have never purchased a home before, have never refinanced a home. So we're going to kind of start it from the beginning. All right. So Kelly, help us out with this. Add some color to this. I'm getting ready to purchase my first home. I don't know anything. What do I need to know about the different loan programs? Kind of talk about what they are. What, as a first-time home buyer, I hear oftentimes FHA. Okay. Can you kind of explain what an FHA loan means to a potential home buyer?
An FHA loan allows a borrower to put less money down. It also has more lenient credit qualifications. You can have some medical bills maybe that didn't get paid by your copay borrower, or you weren't able to pay them at that time. The FHA loan is actually a loan that's insured by the government, that in case you don't make your payment, they will cover the servicer or the investor's loss. But you'll actually have a traditional loan from a servicer or a bank that'll collect your monthly payment and interest.
All right, so let's kind of keep it simple. So we're talking about FHA, low down payment. Typically on an FHA, the minimum down payment required is 3.5%. Is that correct?
Yes.
There are some loan programs that allow for some a little bit less. There are some, I think, even 0.5% down payment programs where they structure it with a first and second mortgage. But again, we're going to keep it simple. So an FHA loan, 3.5% down payment. You get very competitive market interest rates.
Phenomenal rates.
And more lenient guidelines from the underwriting standpoint. You don't have to have a perfectly clean credit history and be on the up and up and have an 800 credit score. So this is typically known as a first-time home buyer program, but let's kind of get that myth out of the way that it's not only for your first home. It can be your fifth home. It doesn't matter. It is just considered a low down payment program. Okay, so that's an FHA, low down payment program, 3.5%, and it has loose underwriting guidelines, and credit criteria. Next loan program, a VA loan, okay? VA comes from the Veterans Administration, right?
Correct.
And a VA loan is only eligible for people who have proudly served our country. And before we get into that, we also just want to thank all of our military men and women for the sacrifices that you and your families make to protect our freedom. God bless you, and thank you for your service. So the VA provides a loan program for veterans, whether you were in the military 50 years ago or, you're active military. There are some different credit requirements of how long you've been in the military or how long you've been out. Some of the things that come along with that are some documentation that you need to get along the way, such as what's called a COE, a Certificate of Eligibility. See if they're eligible for a VA loan. Another document that goes along with that is called a DD-214, which is also a discharge paper. If you've been out of the military, the VA wants to know that you were discharged honorably and when you were out. So really, as a VA mortgage borrower, it doesn't mean a whole lot to them other than, we need some documentation for you. More work as the mortgage guy because you've got to make sure that everything's up on the VA. But what the VA loan program allows, Kelly, is what? Low down payment or no down payment?
Actually, the VA loan allows 0 down payment. And it has the lowest interest rate of any of our loan programs, and unequivocally 100%, it's the best loan you can have out there in the market.
So I think that's pretty awesome that they're rewarding the veterans with this.
Absolutely. It's the best loan that I can do. Borrowers come to me with 20, 30% down. We still take them into the VA loan because it has a lower interest rate. It actually has a easier qualification program if we have our documentation. Let me tell you a story, Logan, about a gentleman who served in Vietnam.
Thank you for your service.
He went into the reserves, and prior to 1986 or 1984, I'm sorry if I'm not accurate on the date, the government didn't have their records electronically. They were manually done. So this gentleman didn't have what you mentioned as COE or a certificate of eligibility. Well, me and my staff, we were able to help him go around to his different bases where he served, get his service time, get his certificate of eligibility, and that gentleman is buying a $365,000 house today with a $1,900 payment, which is less what he was paying in rent.
That's one of those awesome success stories. And again, good job, VA. We try to keep it positive on this show, but we know sometimes the VA doesn't help the veterans the best that they should, but it's really rewarding to know that they are doing that from the mortgage side.
Logan, we had incredible assistance from the VA, and there was a gentleman that I talked to on the phone, and he assisted me through all through the whole process, And I have nothing but great things to say on my side of it with the VA administration system here in Phoenix.
So again, thank you to all the military veterans out there. If you are looking to purchase a home, Kelly McCurdy with CNN Mortgage knows the VA loan guidelines, the process, and as you just heard, has diligently been working with someone who proudly served our country to get them pre-approved. So that's what we're talking about. We're talking about FHA, VA, and we're going to go into conventional. Conventional, what is a conventional, Kelly? I mean, it just seems conventional, very plain and standard. What does it mean?
Logan, conventional means, and actually there's two definitions to this type of loan. A conventional loan, it means a loan that adheres to certain standards, certain down payment, certain payment schedules, things of that nature. And then there's also the term conforming. And like FHA has its own set of guidelines in which you can be approved for the loan, and VA has their own set of guidelines in which you can be approved for the loan. Conforming has a set of guidelines, and if you conform to these guidelines, then your loan can be sold in the servicing market to any of the different companies around. So basically, it's a standardized way of approving a loan.
So it's a conventional, standardized way. It's not an FHA or a VA. It's just a loan program for any average Joe or Jane out there that needs to get a mortgage. Typically, it's a larger down payment requirement. Most times it's 5%.
Actually, they brought back the 3% down payment program.
Wow.
And that's where you look to a mortgage expert. Whether you decide to go FHA or VA, that mortgage expert can help you decide which one's most important. And let me take you back to the Mortgage 101 that you had mentioned earlier. The very three simple things that we look at and evaluate when we talk to the customers. First one, income or employment, and we look at those sources. The next thing is credit. Good or bad, we want to see it. We want to help you through it because we're credit experts, and if we can't work with it today, we'll fix it tomorrow. And then down payment and assets. Those are three of the critical things that we look at. If you don't have any down payment, we'll help you with down payment assistance. If you have good credit, we've got loan programs for you. If you need assistance with your credit, we'll help you take care of it. So those are three things important that we look at, and we try to keep it very simple.
And that's why reaching out to a mortgage professional like Kelly McCurdy is so very important. So we talked about FHA, VA, and conventional. After we come back from our short break, we're going to kind of get into fixed-rate mortgages versus adjustable-rate mortgages. We're going to maybe talk about prepayment penalties and also touch on something that a lot of people don't know, what an APR is, annual percentage rate, which is different than the actual interest rate you're paying to borrow that money on a mortgage. So coming back with some real good stuff to kind of tie into the mortgages. You guys need to stay tuned. Thanks for listening to Life This. Hey guys, I'm here with a good friend of mine, John St. George, owner of Phoenix Carpet Water Restoration, home of the Spot Crew. John, tell us a little bit about your company.
Thanks, Logan. We are a locally owned carpet, tile, upholstery, and oriental rug cleaning company here in the Valley. We're happy to celebrate our 5-year anniversary, and we're giving 25% off to all new customers to call in at 602-319-8446.
So that phone number again, 602-319-8446, 602-319-8446. Call my buddy John for a free estimate today. Tell him Logan sent you. And we are back. Thank you so much for staying tuned for a short break from some of our sponsors. And also want to thank Kelly McCurdy. He's our newest sponsor of Lifeness Radio. We appreciate your sponsorship and support, Kelly.
Happy to do it.
Awesome. Thank you. So in the first segment, we were kind of talking FHA, VA, conventional, different down payment options, and kind of the credit underwriting guidelines that you've got to adhere to or qualify for. Now we're going to kind of talk about getting into the nuts and bolts of a mortgage as far as a fixed rate versus an adjustable rate. So Kelly McCurdy, a fixed rate mortgage is, hey, I'm paying a set interest rate for 30 years. My payment will never adjust or change between my principal and interest, and in 30 years, this mortgage will be completely paid off, right?
360 payments. You make every one. You own your home.
360 of them. Boy, that's a long time. All right, so that's a fixed-rate mortgage. Now, you guys have heard of ARMs, A-R-M, or adjustable-rate mortgages. Kelly, kind of just give us a quick overview of an adjustable-rate mortgage. So if I do what's called a 5-year adjustable-rate mortgage, what does that mean to my interest rate?
Well, actually, what an adjustable rate mortgage does have a fixed period